Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, Mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through this windy, topsy-turvy, upside-down world to hopefully find greener pastures on the other side and come out healthier, wealthier, and wiser. This is your spectator from the spectacle coming from you deep inside the upside down. We've got a bunch of things on the agenda today, of course. We're taking a look at economy mostly, a little bit of information on Bitcoin as well, of course, and seeing how folks are doing in the real economy as well, and not just in the stock market. As I've discussed many times, I believe the stock market is grossly overvalued, and I'm expecting this to rectify itself at some point within hopefully the next 6 to 8 months, I would imagine. I can't see how this can continue indefinitely. So untethered from reality, we'll have to take a look at see what's going on just to figure this out. But here we go. First off, Sven Henrik, as you know, the Northman trader, who I enjoyed following and has some reasonable and realistic outlooks on the market, is worthwhile taking a look at too if you are on Twitter. Anyway, he talks about those internals on new highs from Liz Ann Saunders. He quotes yesterday's record close in interesting company. Data compiled by @Bloomberg revealed that historical days when S&P 500 gained 0.28% or more, while 42% or less of members were advancing, were only before and during the tech bust. Obviously a small sample size. So basically she's saying on the 18th, the S&P 500 gained obviously 0.28% or more, while 42% or less of the members were advancing in the 500. So you've got less than half. In this case, maybe less than 240, 230. I'm not sure what 42% of 500 is. It's probably just a little over 200, maybe 210 actually, I think, doing the math quickly on the back of envelope math. So basically 42% of the 500 members moved the S&P 500 over 0.28%. And the only time that's happened was during and before the tech bust. And we know what happened there, right? Here you can see those days. And they all coincide around the late 1999, early 2000s, when we were heading to the tech bust that we didn't realize at the time, right? So very interesting. Just another little small data point there to be aware of, that perhaps starting to show the cracks are really there, coming considering that the economy is doing so poorly while the stock market continues to be unconcerned with John and Jane Doe on the street, right? On Zero Hedge, they talk about the devastation of the middle class. It now takes 53 weeks of median wages every year to pay for basic needs, which basically means that the middle class can no longer pay for everything to meet their basic needs. So in other words, not only can they not have luxuries, but they can't even have any basic needs met, or at least not all of them. The stock market is back to all-time highs, but for ordinary Americans, the standard of living has not been worse in decades, if ever. This is from Bank of America, points out that life for the vast majority of workers, that is, those who comprise the country's middle class, was already precarious before the pandemic, and nowhere is this more evident than in the cost of thriving index. Consider that in 1985 it took 30 weeks at the median wage to pay for big fixed costs like housing, healthcare, a car, and education. Fast forward to today, when it takes a mathematically impossible 53 weeks out of a 52-week year to buy those things. You can see here's the chart. It's been increasing. This is from Bank of America Research Investment Committee, 2020 estimated. So you can take a look at that if you want. I'm not certain exactly what is considered basic needs or what's put into this cost of thriving index. But regardless, if it's been kept consistent, you can see obviously it's gone up substantially. So that's important to note. In other words, as B of A puts it, thriving has become impossible for the average worker, and adds that it's no wonder that the uncertainty of forecast for future growth remains near record highs. And here's the GDP forecast uncertainty. You can see it's quite high. I mean, it's never been this high since back to the late 60s, right? Just incroyable, as the French say. There's also why millions of Americans are desperately looking forward to another stimulus round, and then another and another after that, for the simple reason that it was the government's pandemic relief that boosted compensation to artificial, if one-time, record highs. You can see that here in the chart, this is compensation with the pandemic relief, the yellow line. So this is really what happened. This is the government intervening, giving us the stimulated the paychecks, the $1,200 stimulus payments, the additional $600 unemployment top-up, and this is what's happened. We've been able to bounce back. And then the compensation of employees, as you can see, has dropped dramatically and has barely come back to practically levels from early last year, right? So this is why a lot of these stores, Target, Lowe's, etc., probably have done well. You've given people money, more money, in fact, than they were getting historically. Let's say this line continues like that, the blue line. So you can see that they've received more money generally, and so folks are spending it because the money we're talking about, this extra $600 a week, is decent. The $1,200 stimulus payment was nice, but none of this really is going to change lives dramatically, but it allows folks to go out and buy things that they need, especially when you take into concern that they cannot even pay for basic needs based on median wages now. So obviously a lot of this goes back into the market. This is why I've been hammering on this drum about giving the money to the people and letting them go out and spend it, because then it'll get to the banks, it'll get to the businesses, etc., rather than putting it into the stock market, which is what we've been doing primarily. But even still, with the amount of money the individuals have been getting, it's obviously boosted the GDP. Now, of course, there's no word on the extra $1,200 or the next $1,200 stimulus payment coming. So that could be probably not happening much before September or October, maybe. And the extra $300 a month that Trump signed into as an executive order for the unemployment top-up is not hitting a lot of people yet. So we're going to see some real changes in GDP numbers probably. And it's going to impact this third quarter, which everyone was thinking was going to be hugely beneficial. I don't think it'll be that beneficial, especially considering that folks don't have money, and the money that they were given by the government is now being spent, and they need more of it. So the question is whether this one-time stimulus, which many equate with universal basic income, has become a permanent fixture of American life, and it might have to. I think maybe that's the only option we have left here. But of course, all this financial engineering, this money printing, is not helpful long-term for inflation, right? So that's going to come down. As I said, I think probably we'll start to see that potentially by next spring, or certainly next year sometime, I imagine. And then we'll see gold and silver really start to take off, Bitcoin as well, likely. And as some folks have been suggesting, we could see Bitcoin reach over $100,000 by the end of next year. And of course, if this plays out like it does, that becomes a likely scenario, especially if inflation starts really rearing its ugly head, at least the official inflation rate, by double digits, right? Emergency savings are tumbling during pandemic, especially in households with income under $50,000. Of households with income below $50,000, about 44% say their savings has dropped, compared with 27% of those earning above that amount, a bank rate survey shows. And of course, $50,000 a year is not a lot of money, especially for a household that has kids, right? And of course, so the higher you have, the more income you make as a family, the more you can save. And that's obvious, right? That's Captain Obvious. By age group, though, the highest rate of no cash cushion is among people aged 56 to 65, and that's very worrying, because those are the folks who should be saving the most, right, as they're nearing retirement and heading into retirement. While roughly 13% of U.S. adults say they have more emergency savings now than they did pre-pandemic, roughly 35% report having less. And it's talking about households with income below $50,000 per year, 44% saying their savings has dropped compared to 27% of those earning above that, as we saw in the headline earlier. By age group, younger baby boomers, those aged 56 to 65, are in the weakest position, with 26% saying they have no emergency funds. Folks with no emergency savings during pandemics, 21%, less than three months, 27%. So that's roughly 48% right there who have less than 3 months of emergency savings. And those with three months or more of 3 months or more of emergency savings is 45%. So it's almost evenly split. And probably that's split across income inequality, I would imagine. More than 28 million individuals were collecting unemployment heading into this month, as we know, because we had a little bump up there again, over 1 million. And as I said, I think it will continue this way. We'll have over 1 million potentially for the next few weeks. We'll see what happens there. President Trump issued an executive order August 9th, as we know, to get an extra $300 a week to unemployed people. However, only a handful of states have signed up to participate so far. So all these politicians taking their sweet time getting these things done, although I must give Trump credit, he did sign executive order, which is fairly quick and easy. But first of all, we don't know the legality of that. And secondly, not all states are able to participate or are participating. In fact, only a handful of them, as it says here. So there's only a handful of people that will start seeing this money now. So that's really quite a catastrophe. The share of respondents with no emergency savings, which is 21%, is lower than it's been in the past surveys. However, McBride expects that bump to be fleeting. And then he says, I think we'll see that increase because of the environment of unemployment, and prolonged unemployment will continue to drain the savings of many households. So folks, there you have it. Folks are hurting. The economy is not doing well. And in fact, middle America is really disappearing. And this has to change, of course. This has to change. It can't continue on like this. You will have riots in the street as you're having now. And eventually that could turn into some dystopian type of novel based on the way that this catastrophe is unfolding like a slow-moving train wreck. There's going to have to be some sort of a reset or a change, of the guard somehow. I think these next few years are going to be very telling, very interesting, and very painful and difficult for many people, unfortunately, and that's very sad. But we'll get through it, and then hopefully we will have the fortitude and the foresight to get to a better place where there's more equality and folks are less focused on greed and money to the same degree, I hope. But we'll see what happens. This is still worrying. Okay, folks, let's take a look at what's happening in the Bitcoin market now. Some interesting news here as well. Let's take a look. Bitcoin market is looking like early 2016, just before the Bitcoin price exploded. And of course, as I've been saying, some folks are calling for a real rally here, perhaps starting later this year in early spring, perhaps next year. But certainly thinking that we might go into our next bubble to some degree by the end of 2021, with Bitcoin seeing over $100,000 per coin. But we'll see about that. Anyway, this is from Grayscale, generally, as we know, which is sort of a Bitcoin hedge fund, as I understand, and where a lot of the big whales are sort of parking their money for Bitcoin price rallies, etc. in it. Bitcoin price, after crashing to under $4,000 per Bitcoin in the broad March coronavirus crash, has bounced to around 12,000. So that's a 3x in just a handful of months. Bitcoin and cryptocurrency asset manager Grayscale has said the current Bitcoin market structure parallels that of early 2016, before Bitcoin began its historic bull run. And of course, what that means is that we could potentially, if history repeats or rhymes, we could potentially be moving in that direction again. Amidst unprecedented monetary and fiscal stimulus, investors are searching for ways to protect against an ever-expanding monetary supply, Grayscale research director Phil Bonello wrote. Because of Bitcoin's unique qualities, such as its verifiable scarcity and a supply that can't be controlled by a central authority, we believe it can be leveraged as a store of value and as a way to escape this great monetary inflation. Bitcoin soared to around $20,000 per Bitcoin in late 2017, as many of you will remember, after starting that year at under $1,000. All right, I wanted to share something with you real quick. This is just a really neat little, I guess you would call it piece of theater, art, what have you, dance. My brother sent it to me and I thought it was really terrific. It's very provocative and thoughtful and unique and unusual, but I thought I would share it with you. I'd encourage you to watch the whole thing through the link in the description, but we'll just watch, 10 seconds or so, and it's quite lovely.
And now the end is near.
So there you have it, folks. It looks a little unusual now in this. It's a bit of a slow build up here in the beginning. I really encourage you to watch it. It's only 5 minutes long, but it really is quite terrific. And to me, it sort of speaks to the journey of life, perhaps, potentially. And so I'd like to get your thoughts below in the comment section, see what you thought of this and what your feelings or impressions that you took away from it. But it's really terrific. And of course, Frankie, all blue eyes there, singing My Way. It's a great little piece. So I do encourage you to watch it. It's really worth the watch. I do encourage you, even if it seems a little bit weird at the moment, starts off a little slow like this, it's quite quite provoking. So give it a chance. All right, let's take a look at the stocks today. Okay, so here's the market. You can see in the green again, of course, because we can't have more than a red day in a row. But fairly flat otherwise, not really too much happening. Let's take a look at gold, see if it's recovering still. Okay, so no, gold is still consolidating, still up about 27% year to date. We'll probably see something similar to silver, and as you know, this is probably just a small little bull run, and now to consolidate before it starts increasing again. I would think this could potentially be a good place to get into gold for now if you have no exposure, because I think there's still probably a lot more upside, probably at least another 20 to 50%, I would imagine at least 25, 50%. But of course, as you know, I think silver has greater potential than that. Okay, and here's a silver, almost now dropped down a little bit, but still around 50% year to date, and again also consolidating there. And that is potentially looking like a bull flag. So we'll see what happens there. And generally, bull flags consolidate for a while, and then they break out and continue on the upside, as we know. So historically, silver I think reached a high of about $48 back in. I'm not sure, but maybe back in 2011 or so. Let's see if we can find it here. Okay, yeah, so it reached a high of about 49, I guess, called 49 back in 2011, around April of 2011. So it's almost, it was just over a little halfway to its all-time high. So I think silver has a lot of great potential. Not only is it going to blitz this all-time high, but I think it could go to triple digits. That's my impression. Of course, no financial advice on this channel, just giving you my thoughts that I'm thinking. So there you have it, folks. Okay, let's take a look at the cryptocurrency market. Okay, down again. So this has probably been a few days of down days. 375 billion market cap, 5,867 coins. And as you can see, the 7 days here are starting to turn red across the board. So this is a nice, great opportunity to buy in. Of course, Chainlink, if you're interested, is looking like it's, again, at a good place to be putting some money in if that's what you're interested in. I don't own Chainlink, so of course I'm just giving you my thoughts. None of this is financial advice. Here's XRP's down, Ethereum, Bitcoin top 3, of course, Bitcoin Cash as well. Litecoin's still up over 7 days. That's another coin I own. I'm generally just looking at the coins I own, of course, because those are the ones that affect me the most. You can see some green across the board here. Tezos is down 12%. Stellar is up over 7 days, so that's not bad, as is Tron and Monero, the privacy coin. I don't own any of those, but it's still interesting to see. Neo is doing well, as you can see, doing quite a rocket ship. I never like to chase things, so I always wait for them to come down before I buy any sort of asset. I like to get a deal. OMG Network, wow, that's phenomenal. Not sure what's going on there, but that's very interesting. I don't know that coin. And here's some other of these lower coins, these smaller market cap coins. As you can see here, we're less than $1 billion now. Doing quite well. The basic attention token is rocking quite well as well. So there you have it, folks. All right. Now let's finish off this week by asking the most pressing question of the day to the online oracle. Okay, so remember up here we were looking at the Bitcoin market as looking at just like early 2016, just before the Bitcoin price exploded. As we've discussed, we've seen Bitcoin analysts suggest that we're looking at big run up towards the end of 2021, potentially seeing Bitcoin at over $100,000. So I thought that would be an interesting question for the online oracle, our trusty sidekick, the 8-ball economist. So will Bitcoin reach over 100,000 by the end of 2021? I think there's a great chance it will. Let's see what the analyst says. Outlook not so good. Okay, so it doesn't think it will. Nevertheless, it could reach up to 99,000 still, and the 8-ball economist would be correct, right? But I think we might be surprised by seeing Bitcoin over 100,000 by the end of 2021. I'd love to hear what you think. Perhaps I'm smoking too much opium, but there you have it. Thanks so much for joining me for another week, folks. I appreciate your time and consideration. Thanks for your comments as well as we try to navigate this really wild ride we're on. I guess it's time to keep the arms and feet inside the carriage at all times and to strap up, use our safety belts, because this wild ride, I think, is only going to get wilder. And in the meantime, let's pay down debt, put away some savings so we can make hay when the sun comes in the next little year or 3, I guess. And in the interim, remember, let's be kind, patient with one another, and walk with a grateful heart. I think that's something I'm trying to practice every day as well, to find gratitude in the small things and all the good opportunities that we have. So there you have it, folks. And remember, above all else, Dom Spiro, Sparrow.